Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
Financial Survival Network is presented to you by Regal Assets. Buy and sell physical gold and silver through your existing retirement plan, 100% tax-free with Regal Assets. If you want to include physical gold or silver in your existing IRA or old 401k, request your free investment kit, which was recently featured in the Forbes and Smart Money Wall Street Journal magazines. Call toll-free 855-678-6620, 855-678-6620, or visit regalassets.com. You're listening to the FinancialSurvivalNetwork.com. I'm Kerry Lutz on 1590 WPSL. Everybody's wondering, you are, certainly I am, if you've got any extra money in this day and age, what do you do with it? Where do you invest it? The stock market, it's got to be making you nervous. It's hitting record highs, and the underlying economy doesn't reflect this reality. And then gold and silver, well, you know my viewpoint on it, but real estate, I've really kind of re-emphasized and reprioritized real estate investments in a portfolio lately, and that's why I've got Jason Hartman over at jasonhartman.com on the line now. And Jason, I'm glad you're back and hope you had a great vacation.
Hey, Kerry, it's great to be back with you. I was recently in Belize speaking at an offshore investing conference, and then I was in Nashville speaking at a survivalist conference, and that was all inside of about 8-9 days. So interesting, different mix of crowds there. But one thing that is definitely true is that people are very concerned, and they're looking for options nowadays.
Yeah, well, you look at the stock market, and in my personal opinion, Jason, and you probably agree, is the age of the growth stock is gone. Now that Apple has been slammed, What is a growth stock anymore? You can look at certain stocks and say, yes, they're growing way beyond the rate of economic growth in the economy of that 0.5% or 1%.
Sure.
But there aren't a lot of companies growing at 30 to 50% a year. So then you look at dividend stocks, and when you're looking at them, you have to look at, hey, are their earnings strong enough to support that dividend? And what happens if the economy turns? Are they going to keep paying it out or cut it, which will be devastating to the price? And then what if there's a general market pullback, which we're more than due for? So at that point, I like gold and silver, but I come back to real estate, and you've got some pretty strong opinions about gold and silver and real estate.
Yeah, I definitely do. And, I just think people, they sort of don't really view investments for what they are, if you will. You've got these people out there, for example, that promote life insurance as an investment. And I think those deals are pretty lame, frankly. I think life insurance is life insurance. And if you need life insurance, then buy yourself a good, term life policy. But you've got this whole group of people out there promoting these whole life policies as if they're investments. And, these insurance companies aren't stupid. I mean, they've got financial engineers that engineer things 69,000 ways to Sunday. And, they believe inflation is coming. And the tie-in here, because you asked me about gold and silver, is that, they don't want you, when you buy one of these whole life investment, quote unquote, type policies, to really understand inflation. And that's how the insurance company is going to win the game, and paying back in cheaper, debased dollars. Well, with gold and silver, I think that's another one that is really got people confused. And my thesis is that gold and silver, Kerry, are a good way to save money, to store wealth. But I don't think they're an investment. I think they are simply a defensive strategy against a debasement of the dollar, against inflation, and against dollar collapse. But again, to be an investment, in my eyes, you have to have two things. Number one, it has to be offensive in nature. In other words, it has to be something that's going to go out and make you money, okay? And number two, it has to produce income. If it doesn't produce income and it's not offensive, it's not an investment. It's simply either a speculation or something that's a defensive way to have a savings account to store wealth. And a savings account, certainly everybody listening to your show, because they're sophisticated people, would agree, is not an investment. It's simply a savings account.
Yeah, you're 100% right. I tell people, do not look at your gold and silver. Don't look at it. Bury it someplace. Hide it someplace. Do not go look at it. Don't go count it. And it's there as the ultimate insurance policy. And one other thing I believe that you have to look at an investment for is inflation protection. That's the third thing. And certainly stocks and bonds really don't give you that. Stocks might a little bit, although generally the market gets killed when interest rates go up, which is caused by inflation. So that always brings you back to real estate as an investment, because you've got the inflation protection on two counts, right? Correct me if I'm wrong. You're the one who really drove this home to me. But if you're looking to protect your investment against diminishing fiat dollars, then real estate certainly will do that for you, because it's going to go up as the value of the dollar goes down, presuming that you invested properly. And then, of course, you've got leverage, which you get to pay back the mortgage, the loan, in depreciating dollars. So you get a double hit with real estate that you really can't get in any other investment. And
no, you can't, because real estate, or income property more specifically than real estate, a certain type of real estate that produces income, it actually, I'd submit to you, Kerry, that you get three hits. You get leverage, meaning you can outpace inflation through that leverage. So, for example, if the historically real estate has appreciated, since the 60s at about 6% annually nationwide, okay? So, really, I don't contend that you're going to make money. That's just going to be nominal appreciation. In other words, nominal means in name only. And so you're keeping pace with inflation, but watch what happens here. If you put 20% down on that real estate, you've got a 5-to-1 leverage ratio. And if you've outsourced your debt to somebody else, namely a tenant, I don't like debt at all, except when I don't have to pay for it. When someone else pays for it, I think debt is absolutely wonderful. Okay.
Sure.
And with my income properties, my tenants pay my debts. I don't pay them. So we outsource our debt to somebody else. And so what you do is you get to hedge inflation by owning the real estate or the income property, and that's the same as you get with gold and silver, because historically both of those asset classes keep pace with inflation. But unlike gold and silver, with the income property, you can leverage it. So say you leverage at a 5-to-1 ratio, you're going to outpace inflation by 500%, Kerry. So the 6% appreciation and 6% inflation is a wash. That's just a nominal occurrence there. So you haven't really gained. But with the leverage, you get to multiply times 5, so 6% becomes 30%. All right? Mm-hmm. And now we are beating inflation by 500%. Okay, if we just owned gold or silver, we're just keeping pace because we have no leverage. Now, I know there are some creative things where they say you can leverage gold and silver, but at the end of the day, there's really no real way that really actually works. No. Okay, there are some schemes, I'll call them, but you can't outsource the debt to anybody else. It's not the same thing at all. Okay.
Yeah.
So then, I said that you said there were two hits. I'm going to submit to you that there are actually three. You really win three ways. So you keep pace with inflation. So you hedge it that way, like you do with gold and silver. Then you leverage it, and you beat inflation, in my example, by 500%, by 5 times. And then you get, in addition to leverage, which is separate from leverage, you get what I call inflation-induced debt destruction. And that inflation-induced debt destruction is where, like you said, you pay back in ever cheaper dollars. Because think about it, debt in an inflationary environment is just the most beautiful thing on earth. What debt does for people when they really, really understand monetary policy, and they can see how debt on real estate attached to commodities, which is really all real estate is, okay? And when I say real estate, I really like to call it income property because it is a little different, but I also like to say, Kerry, and it's kind of odd, that I don't even like real estate. I'm a commodities guy. I'm like Jim Rogers, who I recently had on my show, and I think you've had him on your show too.
Sure.
You know, Jim Rogers is great. He's a commodities bull because, you know, real estate, a house or an apartment building is made of what? Concrete, copper wire, lumber, petroleum products, glass, steel, and energy. Okay? Those are commodities that are traded globally, not indexed to any one currency like the dollar. Okay? And they have universal need. And so what happens with that? Well, when you put debt against the commodity keeps pace with inflation. But you've got to understand, of course, and you do, and your listeners probably do, the difference between real and nominal and the difference between price and value. Because inflation, of course, we know it's this insidious hidden tax that destroys purchasing power. And what does it destroy? Just like you said a few minutes ago, it destroys the value of savings. It probably destroys the value of stocks, although stocks hedge it a little bit. It definitely is very destructive to bonds. I mean, that's bonds in an inflationary environment are like the worst thing, okay? Because with bonds, you're a lender rather than a borrower. And in an inflationary environment, being a borrower is the beautiful thing. And then, thankfully, inflation destroys the value of our debt. So, you know, we all remember in the first Obama election, Joe the plumber. You remember him?
Oh yeah, Mr. Spread the Wealth.
Yeah, and he was made famous by saying, you know, Obama, you're gonna spread the wealth, redistribute my wealth. Well, you know, taxation is a fairly weak form of wealth redistribution. Like if you're a collectivist, a socialist, a communist, and you want to redistribute wealth, the best way to do it is through inflation. It's the ultimate wealth redistribution. Why? Because number one, people don't really lobby against it effectively. Number two, people don't even really notice it. They don't even understand what's happening. You know, okay, prices go up. Well, isn't that just the way the world works? Prices always go up. Why did it happen? You know, only the people listening to your show really understand it. But, you know, John Q. Public doesn't get it, okay? And so it's a great way to redistribute wealth, but look at this. Inflation redistributes wealth from lenders to borrowers. In an inflationary environment, the borrower's debt is debased through inflation. The same business plan we're following with our trading partners internationally. So, you know, we're doing this to China. Of course, they understand it. They know it. They hate it. We're doing this to Japan. We're doing this to any country that's holding our bonds, our treasury bills, our debt. Okay? And also, inflation redistributes wealth from old to young. Why does it do that? Well, because old people generally, hopefully, have assets, and young people generally, unfortunately, have debts. And right now, we know they've got about $1 trillion in student loan debt. And inflation is going to wipe that away. And that's the hidden wealth creator of income property, inflation-induced debt destruction. Okay, so 3 hits, I think. Do you agree?
Oh, yeah, and don't forget that your rental income is going to go up as well as a result of it, so maybe it's 4 hits.
Yeah, well, it's indexed for inflation. Yeah, you're absolutely right, so that's good. So, you know, let me kind of dive into this a little bit on the precious metals thing. Now, just so your listeners understand, in the interest of full disclosure, you know, I own some gold and silver. I'm not a huge believer in it. I think it's okay. I think it's better than dollars. It's better than fiat money. You know, it's better than pieces of paper because it does have intrinsic value. But it doesn't provide income. And anything that doesn't provide income is a speculation. You're just banking on prices going up. And you mentioned Apple stock earlier being, the ultimate growth stock, right? Well, I'm no big fan of Jim Cramer, but it was interesting, and you probably caught this yesterday on CNBC, one of the mouthpieces for the vast Wall Street conspiracy.
Yeah. Oh, yeah.
But Jim Cramer said something really interesting yesterday and kind of ominous. He said, Apple is the new J.C. Penney of the tech world.
Yeah.
They've got problems, and I love their products, but I got to tell you, I don't know, unless they really hit another home run. It's an ugly handoff from growth stock to dividend stock, and maybe that's why they paid a dividend, But back to the gold and silver thing. No financing, no leverage available. So again, you only have nominal treading water or keeping pace with inflation, not offensive growth. Number 3, no tax advantages. In fact, gold and silver are treated as a collectible at a 28% federal tax rate. And again, I'm not a CPA. Don't quote me on any tax stuff. Please check with the appropriate professional. But my understanding is 28%. And, whereas income property is the most tax-favored asset in America. You've got depreciation, the ultimate non-cash tax write-off. You can 1031 exchange it when you sell it, so you can defer the gain indefinitely. That's just an awesome tax benefit. Number 4, it's subject to confiscation. We all know what happened in the 30s, of course. Gold was confiscated. You've got gold dealers out there saying, well, we're selling the St. Gaudens, the non-confiscatable coins. What, the law can't change? I mean, what's that's just the law today, okay?
Oh, yeah.
And some people, gold bugs that I'll get in debates with, they'll argue with me, Kerry. They'll say, well, the government could confiscate your real estate too. Yeah, the government can do anything they want. But the trick is with your real estate, you're only putting 20% into the deal. The lender has collateralized the other 80%. So your risk is low. And then when you follow my 10 commandments of successful investing and you invest in diversified marketplaces, then you're in different jurisdictions. So there has to be a federal confiscation. Okay.
Which is very doubtful. There's not going to be federal confiscation.
Yeah, I mean, it's so unlikely. It's ridiculous. I mean, if that happens, we have much bigger problems, like civil collapse, okay, and, martial law and all kinds of bigger problems, which, there may be instances of that, but I doubt it's going to be nationwide or for very long.
Temporary is the key.
Yeah, temporary is the key. And, depending on how ugly the future looks and how grim it does, nobody really knows yet. Then the next one is high transfer costs. Okay. The gold bugs love to say, well, there's liquidity. It's a tradable thing. Well, that's true. But the question is, what are the transfer costs of that liquidity? Look, when I buy gold bullion, I pay a premium above the spot price to buy it, and that might range anywhere between $50 and $150 per ounce of gold, for example. It just depends when you do it. And then when I sell it, number one, I've got to take a big security risk to sell it because, what am I going to do? Put that stuff in my car? A lot of these gold dealers only deal through the mail. They say ship your gold to us in a box and insure it with the post office, which it is amazing to me how good. As much flack as I'd love to give the post office, Kerry, it is amazing to me that I can go and buy gold and have it shipped to me, and it's heavy, and it doesn't get stolen, and it really arrives. That is mind-boggling to me that system works that well. Okay. Yeah. But anyway, so they say ship it to us. Well, what if I ship you, a dozen American Eagles gold coins that are worth what? $1,700 each, and when you get them, you only say I only shipped you 10 of them. Okay, well, you insure it, but who's watching the package when it's opened? And then they say, well, we have cameras when we open these boxes. I don't know. That's risky, if you ask me. So you could bring it to one of the few gold dealers that has a storefront, but when you sell it back, they charge you a transaction fee, a premium. Okay, so you pay a premium when you buy it, you pay a premium or you lose a premium when you sell it. And so your transaction costs, roughly are about 8 to 12% when your gold or silver changes hands. Okay, and you convert it to and from dollars. Well, people complain about the high transaction costs of real estate, which makes it less liquid, which I say is a benefit because liquidity creates volatility. Real estate, the prices of it move rather slowly, either up or down, because it's not very liquid, okay? And therefore, it's not very volatile. Then the next one, number 6, subject to manipulation. There's a lack of control over the value. Now, of course, you're familiar with GATA, the Gold Antitrust Action Committee.
Of course.
And you've probably had their representatives on the show. I don't know. But GATA... they have investigated claims and I believe filed lawsuits on behalf of gold investors claiming that central banks and, JP Morgan, et cetera, big brokerage firms like that manipulate the prices. And we'd all agree that they absolutely do. Okay?
Oh, yes.
Well, there's an old saying with stocks. Investors complain, well, the market's irrational. This stock shouldn't have done that. All rational thought would dictate this stock should have, gone up or down in value or acted differently. And the old saying is, well, look, get with the program because the market can remain irrational a lot longer than you can remain solvent.
Oh, yeah, I've heard that one too, yes.
Yeah. And I don't know who said that, but, it's a great quote. Well, so does the manipulation of gold and silver prices ever have to end? I mean, with the most powerful interest in the world, the central banks, the Rothschilds, and all the other, 12 families who really run the world, right? I read an article recently that said that the Rothschilds were worth 230, get this, Kerry, $1 trillion, trillion with a T. You don't see this on the Forbes 400, okay? This is a whole nother level of wealth. And nobody really knows what they're worth. I mean, I've heard 60 trillion, 230 trillion. There are videos on YouTube that show how they're worth $500 trillion. I mean, the GDP of the planet is about 60 trillion a year. So that is unbelievable, of course. These central banks, the metals are competition for their fiat currencies. So when will the manipulation end? Maybe never. I don't know. None of us.
Anybody's guess.
Anybody's guess, my friend. And then the other one, number 7, is the supply is questionable. Nobody really knows the supply. And one of our investors, a man named Kerry, he said it best. He said, 60 years old, he said he bought his first rental property from us and said, Jason, I've invested in a lot of things in my life. I've invested in stocks, bonds, gold, silver, oil and gas exploration, businesses I've owned. And the thing I know is that they can always discover a new oil field. They can always discover a new gold mine. They can always create a new stock because that's just somebody's idea taken to the public marketplace in the form of an IPO. And none of those things have limited supply. Nobody really knows what the supply is. But the one thing I do know for sure is that the supply of real estate has been mapped and cataloged and documented, and it is finite for sure. Okay? Now, he's right about that, Kerry, but there's a lot of real estate in the world. Okay? Will Rogers said, invest in land, they're not making any more of it. Well, sure, he's right, but I say that if you've flown over the country, if you've flown over what Hillary Clinton calls the flyover states, okay, the ones that don't matter according to her, yeah, ridiculous, middle America, you see a lot of vacant land, of course. So there is a lot of vacant land. But when you combine it with commodities, with the sticks and bricks, the commodities, the ingredients of an apartment complex or a single-family home, then it gets really interesting, because then you get all the special characteristics, the very favorable tax advantages, the limited supply, the commodities that have universal need. They say globalization has raised 300 million people around the world out of poverty, and they're consuming. Okay, and you combine it with all those things, it has phenomenal characteristics. You've probably read about this, but there's a company that is actually raising money now that says and I doubt they're going to meet this target, but it's still interesting, okay? They say that by 2015, their goal is to send a spacecraft to an asteroid to mine gold and silver and whatever other minerals they find and bring them back to Earth. So, maybe the supply is a lot less limited. I read another article that said earthquakes create new gold finds.
I saw that too, yeah.
Yeah, yes, you saw that one. So, the supply is there's a question mark. Nobody knows the supply. And, of course, if there's more supply, that's downward pressure on future prices, okay? And then all real estate has been discovered, okay? Mm-hmm. Then the final point I make is that, if you talk to any gold investor, and I don't think they should be called a gold investor or a gold or a silver investor. When I buy metals, I don't consider myself an investor in them. I just consider myself a saver. It's just a way to save money, okay? And again, I think it's okay. I think it's better than fiat dollars for sure. But, the question when you talk to people who really are bullish on the metals, you say, well, look, we all know the price over the last 10 years of gold has been good. Same with silver, okay? It's up. But the question really is, did the metal go up or did the dollar go down? And I know these things aren't exactly correlated, because it depends what the time period was. There's a lagging effect, a lagging indicator effect. All of us people in the financial world understand this, okay? But conceptually, overall, almost always they will say, well, the dollar went down, and they're right. So the question is, you just have a nominal, a keeping pace or a treading water result rather than a gain, not an offensive gain. And so, those are some of my thoughts about this. I'm not saying it's bad. I'm just saying we need to keep proper perspective on it. And the last thing I would say is the very careful thing. I had Peter Schiff on my show. I think you've probably had him on too.
Oh, sure.
And Schiff, I like Schiff. I mean, he it's kind of a bit of a love-hate thing. I think his premise is right. I think he's the master of the soundbite. He's obviously a very bright guy. But, he's on my show and he's telling people that they should buy gold certificates for gold stored in the Perth Mint. And I'm thinking, what are you talking about? Isn't that just another form of fiat money? I had the number 2 guy for gold money for James Turk's organization on my show, and it's a whole thing of you're gonna give them your dollars in return for a piece of paper that says you have some metal in a vault somewhere on the planet. Now, isn't that just another form of fiat money? I mean, it's just another promise, right, Kerry? It's just another thing saying, hey, your dollar is worth something because the government says it is. Mm-hmm. To me, if you're going to invest, or if you're going to save, not invest, if you're going to save money in metals, you take possession. That is the only way to do it.
Absolutely. I agree with you. Possession is 9/10 of the law, and really, I think if you don't do that, you're really you're speculating.
Yeah, you are totally speculating on the promise of some other company, and I don't know. I would rather put my trust, and I kind of bite my tongue when I say this. I trust the government more than a private company. Okay.
Well, yeah, well,
for this kind of thing.
Yeah, for sure.
Okay.
Well, I mean, I agree with a lot of what you're saying. I mean, you can argue that that what's happening and what's going to happen, gold could conceivably go a lot higher because there'll be a rush into it and add a currency. But I think real estate gives you that benefit too. A lot of people going into real estate because they see the future of the dollar as being bleak, and it's a way to take your dollars out of the system. And I think, in my opinion, that is one of the primary benefits. And you want to get as many dollars out of the system as you can and put them into things outside it, whether it's real estate for cash flow, because you're still going to need an income no matter what you do. You got to have an income, and you want a return on your investment. And I do agree that gold and silver are pretty static, so it's all part of one formula, which is get your money safe, get it into things that have real value and out of paper assets.
Yeah, totally agree with you. And I like to say to our investors, denominate your liabilities in fiat money, in paper dollars, okay, or whatever fiat currency, and denominate your assets in things that have intrinsic value. So when you invest in income property and you get the benefit of that inflation-induced debt destruction, it is just the most phenomenal benefit ever. I mean, if you have a $1 million real estate mortgage liability today, in 10 years, that basically inflation will pay off just at 10% inflation, which historically, when you look around the world, is nothing. Okay,
yeah.
That is. I mean, I think we have 9.
We could live with
now.
it. We could live with 10%, right?
we're Kerry. If you ask me, we're already living with 10%. Okay,
just go to the gas station.
Yeah, just go to the grocery store, pay the tuition, get some health care, go to the gas station. Any of that, any real things except electronics and technology are inflating like crazy. Okay, but in 10 years, at just 10%. A $1 million mortgage, okay, say you've got 10 little single-family homes with $100,000 mortgages totaling $1 million. Inflation-induced debt destruction, in other words, what inflation pays off, if you will, in those loans is $651,321.56. $651,000 was paid off by inflation, by stupid government. And guess what? If we get higher inflation, which is still historically very low, it's not Zimbabwe, it's not Hungary, it's not Argentina, it's not, really anything we've seen around the world. It's not the Weimar Republic. But say we get 20% inflation. We almost had this during the Carter era. And I would venture to say that if inflation was calculated properly, we probably really had 20% inflation during the Carter years. Okay?
No doubt. You're right.
In 10 years, that $1 million, Kerry, in 10 years, inflation pays off without you putting any of your own money into the deal. Inflation pays off $892,000 of your debt. Wow. And it's debt you haven't even been paying. Your tenants have been paying it those 10 years. You've had positive cash flow. You've had tax benefits. And the value of those properties in the same inflation rate are, at the end of 10 years, $6,191,000. But I'm not even saying you've benefited from that increase in value, because that's nominal. That's just keeping pace with inflation, just hedging. But you add the leverage back into that, and you've increased it by 500%. So this is why income property is the ultimate wealth creator. It's just, I just don't know anything better than income property, because it has all those unique multi-dimensional characteristics.
For sure. And Jason, thanks for that refresher course. I definitely needed it, because there's just a lot of positives, and rentals, and the other thing is it's a play on the foreclosure crisis, which is still going on, even though the government would like you to believe it isn't.
Oh, no, it's still there.
Yeah. And that means increased demand for rental properties. So it just makes total sense. Anyway, Jason, we got to get going. So we find you where again?
At jasonhartman.com, and that's JasonHartman.com, jasonhartman.com.
All right, Jason. Well, we'll talk to you again soon. And next time we'll line up a few properties that are out there that you think are good buys so you can see what's really on the market and what your potential return is.
Sounds good, Kerry.
All right. You be well.
You too. Thanks.
All right. So we'll mix this. I'll shoot it off to you tomorrow morning since my producer is gone for the day.
Okay.
Right?
Sounds good. Hey, thanks. I hope I didn't go too long.
No, that's all right. Hey, it was interesting. If it wasn't interesting, I would have cut you off. It's interesting.
All right. Good. Well, I'm glad you liked it.
Yep.
Okay.
Hi, I'm Kerry Lutz, host of the Financial Survival Network. We talk a lot about investments. We talk a lot about what to do with your money. If you're looking to invest in income-producing property, I recommend Jason Hartman. He's helped thousands of investors realize their dreams and help them to finance their retirements. He can help you find income-producing property anywhere in the country. He's got the know-how and the understanding to help you buy the right property at the right price. But it doesn't end there. He'll show you how to effectively manage your property and get the highest cash flow possible from it. And when it comes to the maximum tax benefits of your real estate investment, Jason is tops. Find Jason at www.jasonhartman.com. That's Jason, Hartman.com. Again, jasonhartman.com.